Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hi, welcome to this edition of the Investing Podcast. Today we're going to be talking about uranium and specifically the proposal that what Cameco is going through right now. Cameco, of course, the biggest pure play publicly traded uranium producer in the world. It has big mines in Canada. But first, what I wanted to say is you can obviously see that I'm not dressed up today. I'm wearing this Orphan Aid Liberia shirt. And we have done a decent amount of work with Orphan Aid Liberia. It's a great organization. You can go to their website, but essentially what they do is they feed orphans in Liberia. It's a very simple charity, a very transparent charity. You can go on their website. The financials are extremely easily accessible, which is rare for a charity. So this is something that we do on the side. But I want to get back to uranium right now. So Cameco has had a really tough go of it of late. They had issues with taxes, essentially not paying the taxes that they thought that some governments thought they should have paid. They've had issues with the price of uranium, just going down. Obviously, the nuclear disasters in Japan with Fukushima. So the combination of all this kind of has conspired for a very depressed market in uranium, really all commodities, but uranium especially. On top of that, you have all the continued pressure by regulators on uranium in general, but especially on these nuclear facilities. What they've found is that for the longest time, everyone thought that, hey, it costs a lot to build a nuclear facility, but over time, the cost of actually producing that power is extraordinarily cheap. What they found instead was that yes, it is cheap, but the cleanup costs are astronomical. Not only the actual physical cleanup costs and what the money that goes into it, but also the negative externalities. And there has to be a price associated with that. As a result, regulators have really clamped down. Companies have found it more difficult and not so profitable to operate, and this means that uranium prices are depressed because for the longest time, they stockpiled nuclear weapons during the Cold War, and then there was the issue with bringing on nuclear power, and then all of a sudden this has kind of faded into the background. On top of all this, you have a slide in the price of coal, slide in the price of natural gas, so other ways of producing electricity have become cheaper. Although we continue to use more electricity, we're now using it more in electric vehicles, for instance. We are using that with a multitude of different forms of electrical power. And this will probably only increase with the advent of solar power, with the prices coming down on that. And then, of course, the further proliferation of wind power and the continued strength of hydroelectric power. So nuclear has been a little tough spot. So what generally happens in this situation is that if the big fish in the room or the big fish in the tank decides to dramatically cut production, it usually has an extraordinarily good benefit on the rest of the industry. In fact, the stock of the company that cut production might actually go up. And this is exactly what we saw today when Cameco announced that it was taking its employees down from 1,055 to about 210, a cut of about 80% of its employee base. They're shutting down production at the biggest mine in the world, at McArthur River. And this is having a very positive impact on the market because prices rise as a result. So you're seeing some good movements in other uranium producers. If you want to play a levered play on this, kind of with some operational leverage, some optionality, take a look at Denison Mines. In the U.S., it's DNN. This is a junior miner. They have a 60% interest in a mine way up in close to the Klondike, actually, in Saskatchewan. And this could be a really good mine And when prices go up, that option value also increases. So Denison is almost an option in and of itself. We do own shares of this for clients and employees. Again, it's a very, very small position. It's extraordinarily speculative. I'm not recommending, this is not a recommendation at all, but it is a way to have leverage to this news that came out of Cameco. The thing you also have to be aware of is that uranium is also produced as a byproduct from a number of other mines. So in Australia, BHP actually produces a fair amount of uranium from its other mines down there. So they're not pure play uranium mines like McArthur River is, but they do produce a lot of uranium simply because they're producing a lot of stuff, producing a lot of copper, producing a lot of uranium. So keep an eye out on that. One mine's getting shut down. It's a big mine, but I think that, in my opinion, it'll probably be something that gets people interested in the space again, maybe supports a little bit more investment over the next few months. But ultimately, this is a demand story, and the demand is not improving, and it just continues to get worse. So watch this space. Watch the announcements out of Cameco. Watch the announcement out of Denison, and especially watch the price of uranium, which you can find online. That's it for now. Thank you.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.